watching the same old shenanigans, right? Gold gets painted with a double top, and now it goes down $100 in 2 days as everybody sees the double top and says, I got to get out. I'm good for a while. Silver runs up. They paint a reversal candle, false breakout above 30 is what they're trying to do. They hike margins to pull this off. All of it, it's just crap. Because at the end of the day, and we've been talking about this for 15 years, without the physical metal, that whole system blows up. That's why you don't want it in an unallocated. You don't want your gold and silver in an unallocated account. You don't want it in ETF. You've got to actually buy it and own it and take delivery. And one day, and maybe it's beginning to shift, the physical market begins to actually assume pricing control.
In today's episode, we delve into the less visible intricacies of the precious metals market, guided by the expert analysis of Craig Hemke. This exploration reveals the layers of manipulation that often distort the true value dynamics of gold and silver, critical components of the global financial ecosystem. Market manipulation. Hemke illuminates common manipulative tactics within these markets, notably the artificial construction of double tops in gold, which spurs premature investor sell-offs by suggesting a peak in prices. Similarly, the silver market is frequently distorted by orchestrated false breakout signals. These maneuvers are not merely technical anomalies, but strategic efforts to influence market behavior and protect vested interests. Role of big banks. The influence of major financial institutions, including JP Morgan, Citigroup, and HSBC, is profound, particularly when their substantial short positions in silver are threatened by price increases. These banks are known to employ a variety of risk management strategies, such as adjusting trading times and margin requirements, effectively suppressing price ascents to mitigate potential losses. Impact of geopolitical and economic events. The pricing of precious metals is also heavily influenced by global geopolitical and economic events. Hemke points to a potential decentralization of price control from traditional Western exchanges like COMEX to burgeoning markets such as Shanghai. This shift could herald a new era of pricing mechanisms driven by differing market dynamics and possibly leading to a more balanced and transparent trading environment in precious metals. Now, we'll show you the best clips of the latest interview, but first, smash the subscribe button and turn on notifications so you do not miss out on our daily recaps. Enjoy the episode.
Similar. That day with the silver squeeze back on February the 1st of 2021, I think silver got to 30.20, was a high. And then we had the famous, Rostam Behnam, the head of the CFTC, talking about how we had to tamp down the price. Why? What business is that of yours? But again, when the big market-making banks are net short, like right now, 400 million ounces, well, every dollar that it goes up is another $400 million in paper losses. Not all constant, it's not all in one position. I'm talking net of a group, but nonetheless, another $5, that's $2 billion in losses. So to keep the market orderly, we got to tamp it down. You can see this then. This is why potentially Friday the 17th was such a big deal. Because after the run up with COVID, in the spring of 2020, silver went up to 28.29. And then it was, again, inclusive of that silver squeeze, in early February 2021, 29 was like a hard cap. There were 4 occasions between July of 2020 and July of 2021 where the spot price of silver closed above 29. And on all 4, I invite anybody to go look this up. I'm not just making this stuff up. On all 4 of those days, the very next day, a huge red candle and a drop of about $1. Okay, so somebody knew, look, we cannot afford a breakout. All right. So fast forward to, really the week of the 13th. And all of a sudden, silver is just beginning to soar. It gets through 29, goes up to 30, gets through 30. And on the final day, Friday the 17th, boom, just blast forward. It looks almost as if pricing control is moving to Shanghai because Shanghai is going up 5, 6, 8% a day and is trading at $35 an ounce, and COMEX is down here at 29. Well, at some point, do the banks have to let price go? Because if that arbitrage gets too wide, they're going to, the COMEX vaults, even if you count it all up and assume it's all there, is only 270 or 80 million ounces. Well, that can get drained pretty quickly if the arbitrage becomes profitable enough. So they have to let the price go up, right? I mean, there was maybe a reason why the heads of the 4 major bullion banks all appeared in Shanghai to meet with the Shanghai Gold Exchange people in late March and April. But maybe they're worried about this. Anyway, so you get this pop up through 30. We finished Friday the 17th at 31 and a quarter. It's a clear breakout. Actually, by the time the Globex trading ended at 5 o'clock Eastern that day, we were 31.77. It's a clear breakout. And again, at that point, price management mode kicks in, and that's now what we've seen the following week. Again, going forward, the key thing will be, Patrick, to what extent does a physical offtake market, well, within China, begin to now drive price? And does the COMEX have to become reactionary to that rather than proactive with their margin hikes and all the other crap games that they've played for decades?
Commerzbank's silver and gold price predictions for end of 2024 and beyond. In the report released today, Commerzbank has revised its forecasts for silver and gold prices, offering insights into the precious metals market for the end of 2024 and beyond. While silver sees an upward trajectory, the bank anticipates a decline in gold prices in the second half of 2024. Commerzbank's latest report includes updated forecasts for silver and gold prices. Notably, the bank has raised its projections for silver prices for both the end of 2024 and 2025. The revised forecast places the ounce silver price at $30 by the end of 2024, up from the previous estimate of $29 for the end of 2025. Now expects silver to reach $32 compared to the previous forecast of $31. Conversely, Commerzbank foresees a decline in the ounce gold price in the second half of 2024. The bank predicts that gold prices will drop to $2,300 during this period. Now we'll show you more clips of the latest interview. Like and subscribe if you find value here, and let's get back into the episode.
There was a talk when copper was rolling up through $5 a pound last week, that suddenly, the COMEX, the major short squeeze and all this. And maybe there was for a day, but really the pricing power in copper's in London on the LME, where it's priced by the ton. Okay. And that's an actual physical offtake. COMEX has like 20,000 metric tons in 6 different vaults geographically around the country around the US. 20,000 tons is, believe me, it's nothing. I mean, it's next to nothing. So this idea that they were going to sail ships, divert ships full of copper concentrate and copper stuff to these COMEX vaults is just not. It's written by people that don't know what they're talking about. But copper has more in common with silver now than silver has with gold. I mean, maybe one day again, silver will be a monetary metal. There's an investment component. I've got physical silver that I own as an investment that you don't really have with copper. But in terms of industrial and electrical demand, silver now has more in common with copper than it has with gold. And I mean, it's a great conductor of electricity. And so that is why, besides a little bit of investment demand, the total combined silver supply deficit from 2001 through 2024 is going to be like 700 million ounces. Okay. Now there's people that pretend to be experts that say, oh, well, that's because there's all kinds of silver laying around. It's not a problem. You can always melt down grandma's teacups, or place settings and her candlesticks. Okay. But the problem here is silver, again, is in short physical supply in a market that's, in the primary pricing scheme is off of derivatives and leverage. So what happens when the silver runs out? I'm going to can I just keep going for a second? I don't mean to.
No. Go ahead.
Go ahead. Like filibuster this whole thing. Okay. let's talk. I want to talk. I've wanted all week to talk about copper, so I'm finally going to be able to do it. Um, I have believed for 15 years that the supply of physical metal, gold and silver, is kind of just in time, hand to mouth, if you will. The banks that operate in London, remember Nowak, the guy from JP Morgan that's now currently in jail for price manipulation? He was the head of the JP Morgan Global Precious Metals desk, running paper price, but he was also on the board of the LBMA in London. Okay? So think about that as like a hand and glove. Okay? So the banks manage this price. They know where the orders are. They know where the physical orders are. They know where the physical supply is. They manage the price of gold and silver on a daily basis, really, to a level that they can flow metal. And again, almost like a just-in-time delivery. There's not like this massive stack of gold that they can constantly just be dumping, right? They'll raid. This is why the ETFs have been going down, because the banks, the bullion banks, are the authorized participants, the only entities that are able to take metal out. Okay, so think of it as just, and I've always thought that the case. Well, maybe that's what's going on now in copper. I'll give you two things that have happened in the last 6 months, and all of a sudden, oh my God, are we running out of copper? When I wrote my annual forecast a year and a half ago in January 2023, I had a big section on copper because Goldman Sachs at that time was saying that above ground copper supplies may be non-existent and extinct by August of last year. Okay, well, that didn't happen. Okay, maybe they're just early because now 9 months later, we're talking about that, right? The ships having to be diverted to New York, and this kind of crapola. Okay, Goldman Sachs still forecasting $12,000 a metric ton for copper in London because of these supply constraints. Again, living hand to mouth just in time. Two things have happened that have upset the apple cart. One, back in April, the US and UK, as a sanction against Russia, said the London LME and the COMEX can no longer take Russian copper, aluminum, tin, and nickel, maybe. So now you're removing a supplier of copper to the exchange. That's a big deal. But even to the extent of this just-in-time delivery, do you remember late last year the news about Panama shutting down the Cobre Panama copper mine? Do you remember hearing? Does that ring a bell? Okay. First Quantum Minerals operates that mine. It's the largest open pit copper mine in the world. 1.5% of global copper supply comes out of that mine. 350,000 metric tons a year. Okay. So when I mentioned the COMEX only having 20,000 metric tons, okay, 350,000 metric tons of copper production was taken offline with that one mine that is still offline because Panama wants to negotiate a better deal. So between that and the Russian thing, are we suddenly out of copper? I mean, maybe. So anyway, the reason I tell everybody all of this, we're watching the same old shenanigans, right? Gold gets painted with a double top, and now it goes down $100 in 2 days as everybody sees the double top and says, I got to get out. I'm good for a while. Silver runs up. They paint a reversal candle, false breakout above 30 is what they're trying to do. They hike margins to pull this off. All of it, it's just crap. Because at the end of the day, and we've been talking about this for 15 years, without the physical metal, that whole system blows up. That's why you don't want it in unallocated. You don't want your gold and silver in an unallocated account. You don't want it in ETF. You've got to actually buy it and own it and take delivery. And one day, and maybe it's beginning to shift, the physical market begins to actually assume price control. So anyway, that's a really long answer. But what I wanted to do was kind of lay out this whole copper situation for people so that they can then translate that to silver. And if copper is in a real problem, well, they're just not going to be able to keep silver down. They're just not.
What do you think of today's show? Do you agree with Hemke? Post in the comments section down below your honest opinion about the rumors of a silver squeeze, and watch this video right here because it's a perfect fit for you. I see you on the other side.